Hello friends, how are you? I believe you will be healthy, wealthy and wise. And today our topic is taxation of cryptocurrency. And why? Because recently our finance minister Nirmala Sitharaman has presented the budget 2022. And in this budget, first time uh, the government talked about the cryptocurrency and the taxation on cryptocurrency. So today we will discuss taxation on the income from transfer of cryptocurrency and what is digital assets, what is virtual digital assets, we will define it, and apart from that we will discuss about the definition of property, and we will also discuss the TDS provisions on crypto assets and some other points which are still untouched. So we will discuss all these things in this video. Now, so start with definition of virtual digital assets as per finance bill. So I'm sharing my slide. Just a moment. Yes, the slide is I believe slide is open. So now digital assets taxation 2022 section 2. Generally in any act, section 2 is a clause section where all the definitions are covered. So section 2 where definition is covered, and under subsection 47A of the finance bill, virtual digital assets is defined. So I read generally as per this understanding of this clause of this section, the digital asset, virtual digital asset includes and comprises of all types of crypto assets, tokens, assets in the metaverse and non-fungible tokens, NFTs. So I read the complete section for you, section 2 subsection 47A of the finance bill 2022. So what is virtual digital assets? So there are sub clause. Clause A is any information or code or number or token not being Indian currency or foreign currency generated through cryptographic means or otherwise by whatever name called, providing a digital representation of value exchanged with or without consideration, with the promise or representation of having inherent value or functions as a store of value or a unit of account, including its use in any financial transaction or investment, but not limited to investment scheme, and can be transferred, stored or traded electronically. So this is about cryptocurrency. And then B part is a non-fungible token, NFT, or any other token of similar nature by whatever name called. So this is NFT. And another C part is any other digital assets as the central government may by notification in the official gazette specify. So in this budget, government already clarified that RBI, our central bank, will release a digital currency during the financial year 2022-23. So from this it is understood that the definition of virtual digital assets inclusive all type of crypto assets and all cryptocurrencies, tokens, assets in the metaverse and non-fungible token or NFTs. Now come to taxation part of this virtual digital assets. So government has introduced a new section, section 115 BBH under Income Tax Act, and by this income from virtual digital assets are taxed. So income on transfer of any virtual digital assets would be taxed at flat rate of 30%. So all the income when you transfer any virtual digital assets, and if you get anything, if you gain something, it will be taxed at the rate of 30%. Another one thing, there will be no allowance or deduction in respect of any expenditure apart from cost of acquisition. Means there will be no allowance or deduction of any expenditure in any nature apart, only you will be allowed only cost of acquisition or cost of purchase. It will not also allow a set of any loss to be added against any other income. Meaning thereby, if you have any loss, it will not be adjusted against any income. Like in any other case, like if you have loss on income from house property, and if you have gain, if you have income in salary, then it will be adjusted. But here the law is not allowing any loss to be adjusted against any other income. Another one is, this loss is also not allowed to be carried forward for subsequent years. Means this loss cannot be carried forward. Like in any other case, it is carried forward. Like in case of capital loss, in case of long-term capital loss, in case of short-term capital loss, business loss, all losses are carried forward, but this loss will not be carried forward. Now come to another part. Expansion of definition of property under clause D of the explanation to clause 7 of section 56. So section 56 basically is other income. It defined other income from other sources. Here the government has introduced another clause, expand the definition of property under clause D. So where it is, if you are gifting any digital assets worth more than 50,000 to a relative, it will be entail the recipient to pay tax. Means it will be covered under income from other sources if you are gifting any digital assets worth more than 50,000. There is another clause, another section is introduced in this finance bill, and this is for TDS provisions, tax withholding. There is a new section 194S is proposed for withholding tax. So if anyone is transferring any virtual digital assets to a resident, then at the time of payment it will be a duty of the transferee to deduct 1% TDS on such sum, and taxes are to be deducted only if transaction exceeds rupees 50,000 in a particular financial year, and this is also in the case of specified person. And here specified person is individual or HUF whose turnover from the business does not exceed 1 crore or 50 lakh in case of probation during the preceding financial. And any other case, if transaction exceeds 10,000 in a particular financial year, then 1% TDS will be deducted. So it is very stipulated that care would be taken to ensure that the taxes have been paid by the person buying the digital assets in cases where a transfer has been made in kind in exchange of another digital assets, or instances where there is no cash transaction. Now there is another part. Since this digital tax scheme is prospective in law and will be effective from only 1st April 2022, means assessment year 2023-24. So there is no law governing the taxation of income arising from transfer of digital assets for the previous assessment years. Means if you have made any gains during the financial year 2021 or 21-22, there is no clarity on the subject, whether the gains or losses, how it will be treated. There are another very common areas where the law is still silent, and I believe in next 3 to 6 months everything will be cleared from the government side. So but this is also a welcome step, a positive step for crypto traders or investors. There are some areas also which need to be looked upon, like when the government is saying that any income on transfer of digital assets will be taxable, but there is no such clause or head is mentioned where it will be taxed, like income from other sources or income from capital gains or income from business, where it will be taxed. There is no clarity on this, and apart from this there is no clarity on the cost of acquisition and sales consideration also, so that can potentially can create confusion and litigation over the method of calculation of income. And apart from that there is no clarity on the crypto mining, because there are some crypto miners also. So there is no tax implication which would be faced by crypto miners. There is no clarity on this aspect also. And apart from that, as government has made it clear in the bill, it is categorized as digital assets. So when this is assets, so GST will come in the picture or not, this is also not yet clarified. So all these aspects will be cleared, I believe, in next 3 to 6 months, when the actually RBI will roll out digital currency. So thank you so much for viewing our video, and please comments if you have any questions, and please like and share our video and subscribe our channel Invest Broker. Thank you. Thanks a lot.